Thank you, Manisha. Well, good morning and welcome to day 2 of the Singapore FinTech Festival. It's great to be able to meet in person after 3 long years. Pandemic and lockdowns notwithstanding, FinTech innovation has marched on briskly. If anything, digitalization has gathered pace and become more pervasive. Yes, in the realm of assets, a harsh winter has set in, even fears of an ice age. But I believe it is an overdue cleansing of unsustainable business models, highly risky practices, and unviable use cases. The digital asset industry will end strong. But more of that later. FinTech in Singapore has continued to push new frontiers. There has been a surge in collaborations across businesses, financial institutions, FinTech startups, and even central banks. In 2021, FinTech investments in Singapore hit a high of $3.9 billion US dollars, compared to just $0.9 billion US dollars in 2019. I'll focus my remarks today on 5 key problems that FinTech collaboration in Singapore is trying to solve. Now, these problems will resonate with many industry players as among the biggest pain points crying for a solution. But before we get into the problems, some wisdom from ancient China. According to the Chinese philosophy of Wu Xing, there are 5 fundamental elements that function as cosmic agents of change: water, metal, fire, wood, and earth. In describing the FinTech projects aimed at solving each of the 5 problems that I will list, I will relate them to the properties of these 5 elements. The 5 key outcomes we want to achieve through our collaborative FinTech projects are: 1. Instant remittance. 2. Atomic settlement. 3. Programmable money. 4. Tokenized assets. And 5. Trusted sustainability data. So, first desired outcome, instant remittance. The advent of real-time payment systems over the last few years has made domestic payment flows seamless in many countries, as many as 60 countries. In Singapore today with PayNow, we can make 24/7 real-time transfers using just mobile numbers or unique entity numbers. But the world has not solved the cross-border payment problem. For most people, it remains slow, costly, opaque, and inefficient, relying on an archaic network of correspondent banks. According to the World Bank, the global average cost of sending remittances is a hefty 6% of the transfer value. And just imagine, this is particularly painful for the migrant worker who wants to send money home, or the small business which wants to reach out to overseas markets through e-commerce. We want cross-border payments to flow seamlessly like water. One way to do this is to build linkages across countries' real-time payment systems. Just as canals allow boats to pass from one body of water to another. Now, Singapore has been working to connect its PayNow with the faster payment systems of other countries. We connected PayNow to Thailand's PromptPay last year, the first such linkage in the world. And we're now finalizing our linkages with India's Unified Payment Interface, or UPI, and Malaysia's Do It Now. But such bilateral linkages take time and resources to implement. Each new linkage requires a refresh in technical alignment between the 2 payment systems. It also entails accommodating domestic policies such as data privacy and security, sanctions screening, and even capital controls. Furthermore, the number of required links grows exponentially as the number of countries participating in the payment network increases. It will require some 190 links for 20 countries to be interlinked on a bilateral basis. So MAS has been working with the Bank for International Settlements Innovation Hub on Project Nexus. This is a multilateral solution to link countries' real-time payment systems. With this solution, each country would only need to link its real-time payment system once to a Nexus gateway, which in turn provides direct connectivity to all the other countries already in the network. Furthermore, Nexus is a unified solution that coordinates payment, foreign exchange conversion, message translation, as well as compliance, which would streamline the entire cross-border payment process. Project Nexus aims to address the challenges of speed, cost, access, and transparency. Users can look forward to faster speed. A payment transaction is cleared in 60 seconds on a 24/7 basis. Lower cost. The aim is to meet the G20's target for cross-border retail payments of less than 3% of transfer value. Wider access. The model will enable connectivity for banks as well as non-bank financial institutions. And greater transparency. Senders will have upfront certainty of the fees that are due and an immediate update on transaction status. High security. The central platform leverages on the strong security and risk mitigation protocols built into the national faster payment systems. The 10 members of the Association of Southeast Asian Nations, ASEAN, have a shared vision of a multilateral network of payment linkages across ASEAN by 2025. And MAS believes that Project Nexus can be a key enabler towards realizing this vision. ASEAN is well placed to be a first mover on this multilateral solution. In fact, as this network expands, we hope to see more countries coming on board as we build connectivity from ASEAN to the rest of the world. The second desired outcome, atomic settlement. Real-time cross-border payments does not mean real-time settlement. Let me explain. Project Nexus solves the clearing problem. The sender's bank account is debited, the recipient's bank account is credited instantaneously based on the payment instructions sent through the network, and the recipient can spend the money. But it does not solve the settlement problem. The actual movement of funds between the two banks is not instantaneous. It involves many intermediaries, goes through different ledgers, and takes 2 to 3 days to complete. This potentially creates multiple points of failure and definitely higher cost. We want a real-time settlement system that is strong and secure like metal. We want atomic settlement. Atomic settlement is the simultaneous exchange of two linked assets in real time. It eliminates settlement risk, duplicative reconciliation, and the need for large pre-funding accounts. It has benefits not only for retail payments, but also for cross-currency and securities transactions. One of the most promising ways to achieve atomic settlement is through tokenized assets, which can be exchanged simultaneously on a distributed ledger. And this is what MAS has been experimenting with since 2017 through Project Ubin. Project Ubin demonstrated three things: banks paying one another without going through MAS. 2, decentralized netting of payments while preserving transactional privacy. And 3, final settlement and delivery versus payment by tokenizing digital currencies and securities assets so that they could be exchanged simultaneously. The success of Project Ubin paved the way for further collaborations and progress. Partior, which is a joint venture among DBS Bank, JP Morgan, and Temasek, has used a blockchain-based multi-currency clearing and settlement platform to reduce the settlement time for Singapore dollar and US dollar transactions from days to just minutes. Project Dunbar, a partnership among the BIS Innovation Hub, Reserve Bank of Australia, Bank Negara Malaysia, South Africa Reserve Bank, and the MAS, has built open source distributed ledger platforms for international settlements using wholesale central bank digital currencies, or CBDCs. Now, MAS will be launching Ubin Plus, a global initiative on the cross-border exchange and settlement of foreign currency transactions using wholesale CBDCs. It will focus on 3 areas. One, it will study business models and governance structures where settlement can be performed atomically to improve efficiencies and reduce risks. 2, it will develop standards to support the atomic settlement of currency transactions across platforms that use distributed ledger technology and non-DLT-based platforms. And 3, it will establish policy guidelines for the connection of digital currency infrastructure across borders for better access and participation. Through Ubin Plus, MAS will collaborate with international partners to explore a broader range of atomic settlement solutions. MAS is working with the central banks of France and Switzerland and the BIS Innovation Hub to explore the exchange and settlement of wholesale CBDCs with an automated market maker. What's an automated market maker? Automated market maker will enable the exchange and settlement of 2 or more digital assets to be performed automatically by contract. MAS is also partnering SWIFT to explore different interoperability models to enable instant cross-border payment and settlement across DLT-based systems and existing payment infrastructures. The third desired outcome is programmable money. Money today exists in 2 forms: physical cash in the form of central bank issued notes and coins. Some of you carry this in your pockets. And digital money in the form of deposits with commercial banks. Now, digital money accounts for 92% of money supply in Singapore and has been designed efficiently and elegantly to suit our large variety of daily needs. Payment to merchants, account-to-account transfers, setting up timed or regular payments can all be made with just a few taps on your mobile phone today. So what is the problem with money that we are trying to solve? Money today is not programmable. Programmable money means embedding rules within the medium of exchange that defines its usage. These rules are retained even when the money is transferred. Now, why is this useful? Take, for example, donations to charity. With programmable money, we can have better assurance that the donations reach their intended beneficiaries and the funds are used for their intended purposes. We can program the beneficiaries into the money itself. We can program the beneficiaries and purpose into the money itself. The programmability comes from tokenizing the money and placing it on a distributed ledger. There are 4 options for programmable money. Cryptocurrencies, stable coins, tokenized bank deposits, and central bank digital currencies or CBDCs. Cryptocurrencies are a non-starter. They have performed poorly as a medium of exchange as well as a store of value. Given its volatility and speculative nature, cryptocurrencies do not hold promise to serve as money in the first place. Stable coins are more promising. If well regulated and securely backed by reserves, as per MAS's latest proposed regulations, they combine the benefits of stability and programmability. But their pervasive take-up remains to be seen. Third, tokenized bank deposits. Now, these are digital representation of existing commercial bank deposits that can be used as digital cash to make payments or buy and sell digital assets without going through the banking system. And of course, the fourth, CBDC, central bank digital currencies. They're direct liabilities of the central bank, and they marry the advantages of central bank issued cash with the advantages of the blockchain. They're essentially digital, programmable versions of cash. Where does MAS stand with respect to these four forms of programmable money? Now, if I can summarize, MAS is essentially discouraging retail investment in cryptocurrencies. We are facilitating stable coins through sound regulation. We are allowing tokenized bank deposits. And we are experimenting with CBDCs. Last week, MAS published 2 consultation papers that illustrate our differentiated approach to digital currencies. The first proposed regulatory measures to reduce the risk of consumer harm from trading cryptocurrencies, especially to retail investors. Naturally, this attracted much media and public attention. The second paper sets out regulatory measures for stable coins in Singapore. And informed players in the industry paid close attention to this and have been giving us feedback, good feedback. Basically, MAS expects all stable coins and tokenized deposits issued in Singapore to meet a minimum standard with regard to the surety of its value. Now, this will be done through regulatory requirements on the quality of backing, redemption at par, and base capital. These measures will help position Singapore as a credible hub for sound and well-regulated stable coins with value-adding use cases. Just as the heat of fire shapes objects into new forms, we want to reshape money through our experiments with tokenized deposits and CBDCs. The platform for our explorations in programmable money is Project Orchid, which has introduced the concept of purpose-bound money. Purpose-bound money enables senders to program conditions on a digital Singapore dollar that may be used by its recipients. So rather than debate the pros and cons of retail CBDCs, MAS has taken the approach of asking ourselves, what are the purposes we want to achieve with programmable money, and then working from there as to what is the best way to do it. Project Orchid released its first report earlier this week, which identified 4 promising areas for application of programmable or purpose-bound money in Singapore. Incorporating purpose-bound money to the existing government voucher system to streamline settlement processing, and GovTech and DBS Bank are piloting this. 2, commercial vouchers, which can be used at specified outlets. Temasek, Faz Financial, and Grab are testing this. 3, government payouts to recipients who do not have a bank account. So OCBC Bank and the CPF board will be conducting a trial. And 4th, disbursing grants to training providers automatically when specified conditions are met without the need for any manual verification. So UOB Bank and Skills Future Singapore will be testing this using smart contracts. MAS and the industry will further sharpen our capabilities in programmable money. We will improve the user experience, strengthen security and privacy, and increase accessibility to broader segments of the population. The fourth desirable outcome is tokenized assets. While cryptocurrencies have been the rage among the media and the public, astute industry players know that the real innovation with vast potential is tokenization. Tokenization involves using a software program to represent the ownership rights over any item of value as a digital token or asset. When deployed on distributed ledgers that are secured by encryption, digital assets are referred to as crypto assets. And when they're used as a medium of exchange, people call them cryptocurrencies. And we have seen how volatile their values can be and how badly hurt retail investors who buy them can be. Asset tokenization has transformative potential, not unlike securitization 50 years ago. Because one, it allows high-value financial and real economy assets to be fractionalized and exchanged over the internet on a peer-to-peer basis. Two, it allows the assets to be traded securely and seamlessly without the need for intermediaries. And three, asset tokenization can enable decentralized finance, where borrowing, lending, and trading activities can be performed autonomously through smart contracts, potentially enhancing the efficiency and accessibility of financial services. But DeFi is still in its infancy and is not without significant risks. The disbursed governance processes, coupled with a lack of transparency, renders DeFi difficult to regulate. In traditional finance, if something goes wrong, supervisors can go after the entity, its board and management, and the errant employees. In a DeFi world, there is no responsible entity or individual. How does one take enforcement action against an algorithm? So just as wood has the capacity to grow from tiny saplings to gigantic trees, we want to nurture the tokenized assets ecosystem. Through Project Guardian, MAS and the financial industry are laying the structures and protocols that will help harness the benefits of tokenized assets and DeFi while managing their risks. One, we're building interoperable networks that enable digital assets to be bought and sold across multiple trading venues. Two, we're using regulated financial institutions as trust anchors to screen, verify, and issue credentials to entities that wish to participate in these networks. Three, we are creating a common pool of digital assets that can be exchanged directly without intermediaries. And four, we are establishing institutional-grade security and compliance measures within DeFi protocols to mitigate against market manipulation and operational risks. Project Guardian's first pilot has demonstrated the potential for reducing risks in executing trades. DBS Bank, JP Morgan, and SBI Digital Assets Holdings conducted transactions in tokenized foreign exchange and government bonds. If we scale this, it means freeing up costs that are involved in executing trades through clearing and settlement intermediaries and managing bilateral counterparty trading relationships. Project Guardian has launched 2 new industry pilots to broaden the set of tokenized assets in play. The first, led by Standard Chartered Bank, is about issuing tokens linked to trade finance. The second pilot, by HSBC and UOB, involves tokenizing wealth management products. These projects strive to increase efficiency in the product value chains, lower issuance and servicing costs, and improve transparency and accessibility. We believe Project Guardian can help pave the way for the next evolution of financial markets in Singapore. We want to create a future where any asset can be fractionalized and monetized, where no market is too big to access, where trading costs are drastically reduced, and trust can be established with greater transparency and better accountability. So we invite everyone to join us on this exciting journey of tokenization. Submit your proposals to MAS's FinTech Regulatory Sandbox for live experimentation. As you can see from the examples that I've cited of Project Ubin Plus, Project Orchid, Programmable Money, Ubin Plus, it's about capital market activities, and Project Guardian. There is much more to the digital asset ecosystem than cryptocurrencies. The real value in the crypto industry comes not from speculating in cryptocurrencies, but from tokenizing assets and placing them on a distributed ledger for use cases that increase economic efficiency or enhance social inclusion. The question is often asked, does Singapore want to be a crypto asset hub? If a crypto hub is about experimenting with programmable money, yes, we want to be a crypto hub. If it is about applying digital assets for use cases like atomic settlement, yes, we want to be a crypto hub. If it is about tokenizing real and financial assets to increase efficiency and reduce risk in financial transactions, yes, we want to be a crypto hub. But if it is about trading and speculating in cryptocurrencies for its own sake, that is not the kind of crypto hub we want to be. The final desired outcome, trusted sustainability data. Good data is foundational to driving the green and transition finance agenda. Financial institutions and corporates need good data on their customers' and suppliers' carbon footprints and compliance with their respective transition targets. They also need good data on the climate-related risks that their physical assets are vulnerable to. Quality data is key in the fight against greenwashing and in enabling stakeholders to make well-informed ESG investment decisions. But the ESG data acquisition process is often manual, tedious, and costly. Access to good data sources is often fragmented, and data verification is still at a nascent stage. FinTech can be a key enabler in addressing these data challenges. In fact, we need FinTech to do in the sustainability space what it is doing today in the inclusion space. In short, we need green FinTech. Now, just as Earth provides a firm, steady ground upon which we stand, we want to create a trusted data ecosystem that provides a firm foundation for sustainable finance. To build a green FinTech data ecosystem, MAS has launched a collaborative effort with the financial industry called Project Greenprint. Project Greenprint seeks to build digital utilities that streamline the collection, access, and use of climate and sustainability data. It aims to help mobilize capital to sustainable projects, monitor the climate commitments that are being made, and measure the impact associated with the investments. Project Greenprint has focused on 4 digital utilities. 1, an ESG disclosure portal. 2, an ESG registry of green certifications. 3, a data orchestrator. And 4, a digital marketplace. So first, the disclosure portal. MAS is piloting the ESG disclosure portal with SGX to enable listed companies to carry out baseline sustainability reporting against a set of 27 core metrics. It's titled ESG Genome. The portal allows companies one-time inputs to be automatically mapped across a range of major sustainability standards and frameworks. Sustainability reports can be automatically generated from these inputs. For the next stage, we plan to scale ES Genome into a national level disclosure utility that meets the reporting needs of all companies following a public consultation. We will also cater for cross-border interoperability to allow banks and investors to tap on disclosure outside of Singapore. Second utility, the ESG registry. It uses distributed ledger technology to record and maintain the provenance of green certifications issued by various sectoral bodies. It's titled ESGpedia. It allows banks to access various green certifications through a single interface. And we will continue to build up the registry's network of certifications, providing more confidence to users of these data. Data orchestration, that's a third thing. It entails aggregating ESG data from multiple data sources to meet specific green and transition financing needs. Now, this requires interoperability and consent-based access to major ESG data providers or utilities providers, sectoral platforms, and of course, the ESG registry itself. We are already doing small-scale pilots to identify the financing gaps and technology solutions for decarbonization in priority sectors such as energy, real estate, agriculture, and transportation. And we will partner financial institutions to integrate more advanced data sets into their financing frameworks. Finally, the digital marketplace aims to synergize connectivity across the Greenprint utilities and facilitate access to ESG data. It will facilitate linkages between ESG FinTech solution providers and investors, financial institutions, and corporates. It will also house an ESG data directory to facilitate discovery and access to the ESG data sets contributed by the Greenprint digital utilities and collaborations. We aim to launch the digital marketplace next year. Through Project Greenprint, we want to make Singapore a launch pad for ESG FinTech solutions that will help drive Asia's and the world's transition towards net zero. Let me conclude. The 5 desired outcomes: instant remittance, atomic settlement, programmable money, tokenized assets, and trusted sustainability data remind us that everything we do in finance, in technology, and in fintech must have a larger purpose. We want to expand economic opportunity, enhance social inclusion, reduce risk, and protect our planet. The essential feature of the 5 fintech projects that I described to achieve these desired outcomes is collaboration. Collaboration between the public and private sectors. Collaboration between incumbent financial institutions and emerging fintech firms. And collaboration across borders. Like the 5 elements of water, fire, earth, metal, and wood, it is exchange and interactions among them that generate growth and new possibilities. In fact, it is what the Singapore FinTech Festival is all about. Thank you very much and have a fruitful FinTech Festival. Thank you. Bye-bye.